What's going on, guys? It's Matty here from DCLblogger.com. Thought I'd make a bit of a different video today. It's not going to be related to NFTs or Decentraland or anything specific in the crypto collectible world. It's going to be more broad. It's going to be about the lessons that I learned being in crypto for the last 2 years, observing a bull run in late 2017, observing a very bearish period in all of 2018 or the majority of 2018, and then obviously we're still in a bit of a bullish, we're still in a bearish area right now, showing signs of bullishness, but just kind of understanding the whole space and what lessons I've learned and what things I'll do differently when from the first time I invested. So from the first time I invested was a very different time. I invested, pretty much went all in with Neo in mid 2017. Got pretty lucky, and it went from $5 Neo or $10 Neo entry to about $30 to $40, right? And at that time, it was like such a big increase at such a short time. I really thought crypto was like huge, and I had gotten in very early, and I think I still have, and we have gotten in very early. But my investment strategy and my mentality has shifted pretty big. It's a lot more different now. So I've got about 14 points over here that I've written down. I'm going to go through each one of them and just kind of tell you guys how I think a little bit differently. This is definitely not investment advice, guys. Don't do trades based on what I say unless you really do your own research. It is a very volatile period. Crypto is so volatile. You really need to make sure you know what you're doing. Don't go all in. Just make sure you do your own research before you kind of make moves. All right, so the first point I've got over here is take profits, okay? Oh my God, I don't think I sold anything in 2017, or if I did sell it, it was to like go all in with something else. So guys, taking profits, ignore the lines here, the yellow lines. It's just my kind of weird, I was just kind of drawing channels and seeing like how these moved within these channels. But basically, guys, taking profits is not a bad thing. And being so attached and seeing your portfolio grow more and more every day by like thousands of dollars is so exciting. And it kind of bums you out selling and understanding and feeling like you're not going to have that chance to see your portfolio grow the next day. But there's nothing wrong with taking profits. For example, we had such a long bull period. If you check over here, so this is the top, 13 December 2017, kind of started over here somewhere, right? Maybe even before this, but we're just going to run with this chart. Let's just say it started in mid 2015 and it kind of kept going up from $260. This is an exponential logarithmic chart, so it's going to look like that. But overall, obviously, we're always going to be in a bullish period. But let me just take it off the log chart actually. So yeah, there's this period here where we started to really break bullish, mid 2017. So if you had Bitcoin at $2,000 or whatever, and say you had 10 Bitcoin, right? What I used to do previously I would always buy and sell my complete position. I would always buy with all of my fund and sell all of the coins that I had. So if I was all in with Neo and I liked Binance for whatever reason, my mentality and love for another coin shifted to Binance, I wouldn't leave a percentage in Neo and shift a percentage in Binance. I would literally sell everything in Neo and shift to Binance, right? When my coin started to stagnate a little bit, I'd shift the whole thing into a more exciting coin that seems to be making moves or seems to have a lot of volume. Obviously, I was a very noob beginner investor, so I didn't really understand. That's obviously that's not the best thing to do. But what I would do now is say I had, this is the BTC chart, right? So let's just say I had 10 Bitcoin, somewhere around the $2,000, and if it increases to say, $3,000, that's already like, is that 50% increase? That's 50% increase. So what I would do is I'd sell maybe 10% of my position. What's wrong with selling 10 to 20% of your position? At least you're kind of securing your profits. You're making sure that you're walking away more than what you invested with initially, and then you still got 8 Bitcoin left in your position. Like, you still have a lot of money left in the game. So I'd wait a little bit more, and even if it goes up, I'm happy because I still have 8 Bitcoin. If it goes down, I'm still happy because I took out 2 Bitcoin into fiat. I can kind of buy more Bitcoin with the fiat I took out. So for me personally, it's about creating a win-win situation from now going forward, where I'm not taking out my whole portfolio. I'm diversifying amongst the coins that I think will do well, and I'm also taking profits in a ladder way. Like, I'm laddering down and I'm laddering up when I'm buying and selling. I'm making sure that I'm not FOMOing in and buying everything at that price that I think is good. I'm putting in a bit of funds so that if it goes lower, I have more money to chuck in. If it goes lower, I have more money to chuck in. So, either way, it's a win-win scenario. So say, for example, you sold here, right? You sold at 3,000 US dollars. You still have some money in the game. You sell again at 4,500 US dollars. You're kind of bummed out that you sold early at 3,000 US dollars. But check this out. It goes back down to 3,100 US dollars, right? 3,200. Obviously, you don't know this when you're investing, but what I've learned is don't FOMO. Just because it's going up crazily doesn't mean that it's not going to come down. Like, it will come down eventually. This is just the nature of the world. Whatever goes up really quick eventually comes down at some point, because the hype and the emotion that people have on that specific day can't continue forever. Eventually, people are going to run out, and once things start to stagnate, they'll kind of lose interest. And you can see, like, it's pretty much back to this point, or it reached back to this point, 3,000 US dollars. Like, we touched that point again. Eventually it came down. But taking profits was a big lesson I have definitely learned moving forward, which I'm doing now. So every time something goes up, for example, if I just see suddenly Ethereum goes up 40%, chances are that it's going to at least stabilize or come down the next day. Like, a 40% move is rarely sustainable. Rarely. It might be, but rarely it is. So it's a higher probability that I'll make a better move by cashing out some of my profits, which I do. Okay. Now, diversify strategically, which is the second point. I'm kind of mixing and matching my points right now, but diversifying strategically. For example, if I have faith in Bitcoin, if I have faith in Ethereum, if I have faith in a lot of the top 10 coins at the moment, guys, they've gone down 10x since their all-time high. So they're at a lot of them are at a very good buy price, in my opinion, right now, because like Ripple reached $3.80. It's down to 35 cents. Litecoin, I think it reached about 350 US dollars, down to about 90 US. It's gone up from about 25 US dollars over the last 3 to 4 months. It's increased quite a lot, but it's still relatively cheap. Cardano, Neo sitting at 12 US dollars. I mean, that reached almost 200 US dollars at some stage, and it has a community of almost 100,000 people on Reddit. Like, it's got such a big, strong community. And the buy price at the moment was when it had like 10,000 members on Reddit, when it was back at Ant shares. So since then, like since the last year or two, like the community has developed so much. The value is so much more with Neo. Probably true with all the other coins as well, but Neo specifically, like, it's just a no-brainer. For me personally, it feels like this will go up a lot more. Like, it'll definitely, at the very least, reach at least half of its all-time high, right? So investing strategically, for me, it used to be, back in the day, I used to invest in all these low market cap coins. So I used to go all the way down to the bottom of the first page and kind of see where the $30 million to $20 million market cap coins were, right? Because, for example, this one's sitting at about, let's just go to $60 million. Decentraland's pretty much at $60 million. So I would invest in something like Decentraland just based on the market cap, because if I like the project and I feel like it's got a lot of buzz happening at the moment, then for me personally, it would seem like it's just a matter of time until this catches some really big attention and some really big communities with billion-dollar market caps, like all of these guys, right? Binance, Ethereum, Ripple. If some of these communities start to catch wind and invest in these lower market cap coins, then, I mean, like, if say $500 million worth of investment comes down, then this market cap will increase by almost 10x, right? So your coin and your net worth will increase by 10x if that kind of investment comes through. So my mentality had always been to invest in the low market cap coins, and it worked pretty well, to be honest. Like, I invested in Walton coin back in the day when it was 30 million market cap. I invested in Binance really, really early. It worked really, really well. But nowadays, it was risky. Back then it was risky because there's so many coins. If your coin didn't get much attention and instead of doing really well, it kind of died down because no one really caught onto it, you're obviously risking your money. But nowadays, for me personally, there's no reason to take that risk. Why not just invest in the top 10, 20, 30 coins, diversify among them, because they've just gone down so much, and they already have big communities. They already have products that the crypto community believes in. That's why they're valued so highly. Why not just invest and diversify across the top 10, 20? So that's my mentality right now, is to strategically diversify on safe coins. I don't want to make the most money possible, but I want to make good amount of money, right? I don't care if my success rate isn't 100%. I care just about increasing my portfolio to keeping up with whatever the bull market is going to be, with making sure that I come out the bull market a winner. Okay, so the third point is volume. Okay, volume equals opportunity. This point I should have covered a bit later, but basically whenever there's volume, there's trading opportunity, and a lot of day traders usually start to become more active and they start to see a lot of volume. You see, if there's a lot of stagnancy period, then they don't really trade much because they don't really know how the market's moving. But with volume comes a lot of opportunity, and that's true with cryptocurrency, and it's also true in my experience with in Decentraland and NFT marketplaces. You can see Decentraland. It's like a world where you can buy land, digital land, in virtual reality, and you can build whatever you want in virtual reality. It's built on the crypto. It's built on the Ethereum blockchain, and you can see here lands are selling pretty consistently for $500 US, $1,000 US. Some of the estates, which are the lands that are connected pieces, so multiple lands connected, are referred to as estates. You can see some of these have sold for $6,000 US. They've sold for some of these recently over the last like couple of weeks or a few weeks, have sold for quite a lot, $16,000 US. I think I saw one for about $30,000 US sometime. Let's go next. $25,000 US, 50. So this is all this month still, right? $37,000 US just 2 weeks ago. So what I'm trying to say is the frequency of these transactions. Okay, so 14 days ago, whatever day this was, all these transactions happened. These are only 5, but imagine if the volume picks up with Decentraland or any other NFT marketplace, or it's also true with crypto currency exchanges, is as the volume picks up, there's so much more opportunity to trade, because out of the 30 or 40, only has about 5 or 6 transactions that happened has more. So 14 days ago, seems like 8 to 10 transactions happened with estates, and maybe another 10 happened with single parcels. So say about 20 transactions happened. So there was opportunity to buy and sell, or to sell your crypto, your land, right? Because for whatever reason, it was a lot more active then. I think it was back when Mana spiked. But say there's hundreds of transactions happening daily with this land marketplace. There's so much more opportunity to buy and then sell, with the hopes of someone buying your land, and therefore your trade from buying and selling and you making some profit in between being realized, because there's so much more volume that day. So with more volume, there comes more opportunity for traders specifically. So I would consider myself a trader. There's obviously day traders with cryptocurrency, but I'm also a trader in different marketplaces. Wherever there's a marketplace, I'd love to explore the opportunity in making money in between trades. That's what I'd like to do. Fourth point is explore and never discount anything. There's so many people that will just look at something and be like, oh, that's just stupid. Why would people invest in that? I'm not looking at that. It happened a lot with CryptoKitties. It is happening, and it happens a lot with Decentraland. And it's going to continue to happen in pretty much a lot of things, because some people just have a very closed mentality, and they feel like whatever they've invested in, for some reason, they're the most intelligent person in the planet. And what they've invested in, and I've heard this so many times in Telegram groups where people would be like, oh, this is the best project in all of crypto. This is the best coin in all of crypto. Why would you think that? First of all, have you checked out the thousands of other projects happening at that moment? Have you spent countless hours, tens, probably hundreds of hours? Probably takes 3 to 4 months to go through all the projects in depth, probably even more, maybe even half a year to a year, to go through all the crypto projects in depth, to see all the partnerships, the momentum, talk to the devs, to figure out what is actually the best project in all of crypto. There's so many really, really damn good projects in crypto. What's the chances of you being in the one that's going to increase in popularity the most, or increase in investment the most. It's just silly thinking, and I think you should always have an open mentality to explore, no matter how stupid it is. If you discount it, you are saying no to an opportunity. Okay, you have to treat everything that comes to your life, especially in terms of finance and business, as an opportunity. And the more opportunities you seek and explore, the more chances to make money you will find. Now, Decentraland, I came across Decentraland literally because I liked the icon. I went down to about 95 or 96 on CoinMarketCap, and I was like, oh, what's this icon? Let's check it out. I clicked on it. It said land. You could buy and sell digital land. Had me a little excited. Instead of saying this is stupid, why would people buy these lands? I was realizing that people were buying these lands. So the people that were buying the lands might be a niche people, that set of people that find value in this. All right. So maybe I don't understand it, but these people understand it. And because these people understand it and give value to it, there's an opportunity to make money there. Right. So just because it doesn't sit well with you, you're not the type of investor that would invest in that kind of stuff. If you want to make money, you should kind of explore it at the very least, just to see which direction the technology is going. Sell and buy in portions and ladder buys. Yeah, I kind of went through this a little bit before, but basically, not always just buying and selling in bulk, like 100% of my portfolio, just sell it and put it into a different coin, diversify and buy and sell in ladders. In ladder buys and ladder sells. So for example, if I want to sell and cash out my position, I'm happy with Bitcoin being $5,300 at the moment. It's increased quite a lot. It increased from $3,400 over the last 2 to 3 months. In my opinion, I feel like there's going to be a bit of if I feel like there's going to be a bit of a downturn, then I would cash out a little bit, and ladder selling is a good way. So instead of cashing out my whole Bitcoin position, if I'm more confident, why not just cash out 60 to 70%, right? Just in the case that I'm right, or in the case that I'm wrong. I feel like there's always at the end of the day, we don't know what's going to happen. So for me personally, it's always, from now moving forward, it's always about creating win-win situations for myself. The NFT space, again, touched upon this a bit before, but I am really exploring the NFT space, which is the crypto collectibles area. It's a really good site for that, nonfungibles.com or nonfungible.com. But you can go through some of the projects that seem to be getting really good volume, some of the OGs like CryptoKitties. There's also My Crypto Heroes that seems to be getting quite a lot of volume, transaction volume. But I feel like this is definitely going to go up quite a lot more. I didn't know the Chainbreakers were on here. That's pretty cool. So Chainbreakers is a game that's opening up on Decentraland in virtual reality, also based on Ethereum. The NFT space, I feel like in the next bull run, we're going to see a lot of people that will right now at this current moment, there's so many people that are kind of starved of fiat money. Their investments that they got into, most people got into the hype period of December, and a lot of people aren't positive with their cryptocurrency holdings, right? So they're not very confident in diversifying and exploring these NFT spaces. But as people start to become crypto rich again, their Ethereum, their Bitcoin, their Neo is worth hundreds, thousands of dollars, so much more. It becomes easier to spend. It becomes so much easier to spend. And I remember with Ethereum being worth like $1,000, people were still spending like 0.5 ETH or 1 Ethereum or a few Ethereum on some of these crypto collectibles. People were still I paid 0.5 Ethereum for a Pangrass in Ethereum, right, which is just like a little Pokemon game on crypto. That was $500 I spent, which is like 10 games I could have bought, or at least 5 games I could have bought on Nintendo, on my Game Boy back in the day. So people, I feel, when they become more crypto rich, they spend a lot more money. They happily diversify here and there. And I feel like the NFT market will get some of that. So that's why I'm heavily involved with the NFT crypto collectibles market. Following and understanding TA. All right. So TA is kind of like, a lot of people believe in it. People don't believe in it. But it's not so much whatever people in TA believe will happen. It's just that you're understanding how these numbers move and understanding what the probability might be of it moving in a certain direction at a certain time. Now, I'm not going to say you should 100% do TA or whatever, but in my opinion, like, I've been following some TA specialists, some people that have done a lot of TA with Bitcoin, and understanding where they are and how they think, and that how they can see that Bitcoin is going to continue to trend down because it's trying to break certain resistance support levels. And for example, just on a simple note, like, you don't have to understand TA on a big scale, but like, you don't have to understand the depths and intricacies of technical analysis and all that kind of stuff. But just check this out, right? So this is like the MACD histogram, and you can see that it started to down tick over here. So if you're an investor right here, and you can see that it's down ticking, and I think I could just BLX. Maybe we'll move to this one. This will give us a bigger picture. You can see that this thing kind of moves in waves, right? As it starts to down tick, it continues to go down, and then it kind of starts to flatten out. And as it starts to flatten out, this is a monthly, by the way. So each one of these bars represents a month. So you have a 30-day period in here to figure out what's going on. So as it starts to shift, as it started to go down, and it continued to go down from whatever this bull run period was when Bitcoin reached $1,100 back in November 2013, you can see that it started to downtick quite heavily, right? Big downticks, and then it started to shave off a little bit, stabilize a little bit. Then it continued to big downtick, and now it's starting to curve back up, right? So as it started to curve back up, like this period over here, this would have been a good idea for an investor seeing it from a larger TA perspective, understanding that, hey, look, this might be a good idea to buy. And as you can see, it started to tick up again. It started to have big ticks up, and it continued, and now then we had this period, right, in 2017. And again, the same thing happened. We started to down tick quite heavily, some pretty big down tick. So I wouldn't touch it. But over the last 3 months, or sometime in Feb, when Feb closed, it was a positive uptick, all right? And then it's flattened out, and now it's kind of curving back. So it seems like this period is a better time to invest than somewhere like here, right? Because look how harshly it's down ticking. But anyway, just simple TA understanding like that. Personally, this is something that I have realized, and I know now. Back then, I didn't really understand all this stuff, but it gives me a better perspective as to when to invest and when to kind of like what it might do, what the market might do. And it gives me more skill to work with, as opposed to just, oh, it seems like the market might do this, just based on nothing but what I think at the time. For example, here's another thing that a lot of TA specialists have in mind, that, $6,000 US, you can see that whenever Bitcoin reached about the $6,000 US mark, it kind of jumped back up, and it seemed like $6,000 US was a really good support range, in the sense that Bitcoin found it really difficult to break that, and it held that support range for a good year or so. But when it broke that, now usually what happens with supports is they become resistances. So now, because that support range was so difficult to break, a lot of TA people are saying that it's hard to break that as a resistance, and it used to be a support. Now it's going to be a resistance. So as Bitcoin has increased from about $3,300 US to about $5,500 US, I think it's sitting at the moment, or maybe $5,300 US. It's getting closer and closer to 6,000. In my opinion, it seems like because this used to be a strong resistance, a strong support, it's going to be a strong resistance. So it's not going to be easy to break and hold a price higher than $6,000 US for too long. So, that gives me some insight from a TA perspective, and I've sold some of my positions because I feel like it's going to get knocked back down quite a few times under 6,000 before it breaks that, just from a TA perspective. So understanding TA to a degree where it allows me to implement it on some of my trades, just to give me more of a probability of success, is something that I will definitely implement moving forward. That doesn't mean that every trade that I make is going to be successful. That just means more trades that I make will be successful than me. It's just what probability is. I'm a math guy. I understand math and probability. Just with probability, if you flip a coin 100 times and for some reason the coin, each 100 flips is ahead, then it's obviously very, very lucky, right? But if you flip the same coin 10,000 times, usually that ratio will move closer to the 50% ratio. And I remember doing that in math class, that probability over the course of time will move closer and closer to whatever the probability ratio is. Understanding cycles. What goes up must come down. Okay, so this was another one based on TA. Someone that kind of brought this out to the broader community was Bob Lucas. You can check out his videos. Really, really cool. Goes through the 4-year cycles for crypto. You can see here, this was a 52-week bear market that we just experienced. And he's saying that, oh, we're about to start the bullish cycle. You can see that here's another cycle. From this point, we went from a 58-week bear period, and we started the bullish cycle after that. And you can see in some of his videos, he goes through like the last 4 or 5 different cycles. He shows that the bullish cycle is usually a lot longer than the bearish cycle. So he's of the mentality that the bearish cycle has ended for 2019 or 2018, and we're on the way up. And just understanding cycles, and then whatever comes up, like it seems like the last few months, 3 to 4 months of a bullish cycle is where the most activity happens, but it's also the time when something's going to give, like crypto is going to go, Bitcoin will come down eventually. And so understanding where we are along these cycles will give you a really good grasp of what's going to happen. Like it seems to double or triple it over the last 3 months, 3 to 4 months. And that's about the time where I would personally cash out the next time this happens. Okay. Never FOMO. Never FOMO. One big thing that I learned was, I remember if like Neo or whatever coin I was invested in at the time wasn't really moving much, it was kind of stagnant over the last 1 or 2 months, I would just be a bit bored of it, and then I'd jump to something else that went up 30% yesterday. I'd be like, ooh, this thing seems like it's going crazy. It's going up 30%. It went up 30% yesterday. I'm going to FOMO in and get in. And as soon as I'd get in, maybe sometimes it would go up, but then most of the times it would actually go down, right? It would go down pretty damn hard. And so many times this happened where I'll just kind of lose my investment or a big portion of my investment and just keep buying into this. It's such a dumb thing to do if you think about it at the moment. You're basically the people that investors want to sell to, because you're all hyped up and you want to put your money in, and you're buying something at a very overvalued point, which is not the right time to buy. So never FOMO. Be patient in the sense that there's always going to be opportunity, especially with crypto. Stay away from pump groups. All right. Stay away from pump groups or these groups that say that, you know, you're going to make money with us. TA groups are something different. People that kind of give you insight as to what their opinions are with their technical analysis and what their positions are. Maybe with some really good TA specialists, you can probably make some good money understanding their mentality, and that's fine. But pump groups where they specifically say, all right, we're going to pump this coin to about 50%, jump on it if you can. Guys, well, usually that works with small cap coins. And the problem with that is, here's one that was pretty big with pump groups, Mysterium. Look at this, right? $2 million market cap. It only has $2,400 US. So say you had a couple of $1,000s in there. If you're selling that couple of $1,000s worth of Mysterium, chances are you're going to drop the price drastically as you sell your position, just because there's not much volume, right? And as you sell, there's not much people buying. So, or as you buy, there's not much people selling, or vice versa. The price changes drastically, right? So for the smaller market cap coins with not much volume, you have to understand that when you're buying or selling larger positions, you're going to affect the price, because you're technically a whale considered relative to this coin at that point if you're selling big positions. So these pump groups, if there's so many people on board and they're all cashing out at the same time, what do you think is going to happen to your position? It's going to reduce really, really quickly. You're probably someone that they're dumping their position on. So staying away from pump groups. Never being attached to a coin. Now, again, it goes to my point back with people in Telegram saying that, oh, this is the best project in all of crypto. Shut up, man. Like this, You don't know what the hell the best project is in crypto. It's such a stupid thing to say. What you should be saying, or sidelining and saying, this is a great project in crypto. It has so much momentum. It's something that I am going to keep an eye on. Being so emotionally attached that it takes away your rational thinking and you're just stuck on that project forever. You're going to ride or die no matter what. It kind of limits your thinking. Anything that closes your mind to any level of degree is not healthy. It's always good to have an open mind and understand and be open to being wrong. It's okay to be wrong. It's okay to have your ego hurt a little bit and be wrong. The more times you are wrong, the more times you will learn. It's okay to be wrong. Wallet security is definitely a big thing. Make sure that you are prioritizing your wallet security. You are this people keep their money in exchanges get hacked for whatever reason. Hackers get you through their mobile phone, resetting your mobile phone, whatever it is. But hardware wallets are good, soft wallets are good, paper wallets are good. Managing your own security, it's just such a big thing. It's probably the most important thing in crypto, because you could just lose everything on a bad day if someone just hacks your stuff, right? And you could lose. This is one of the biggest downfalls, I think, at the moment in terms of crypto, or something that's very scary for newcomers to get in. Is just because in terms of security, they just don't understand what to do. And holding your own and managing your own security is such a big thing. Be active. This is the last point. That, all right, if we are in a bear market, then still be active, still be learning. I kind of got bored, so I opened up a blog, right? dclblogger.com. I made a YouTube channel, DCL Blogger, 581 subscribers. This is growing. I'm getting a lot of shares, a lot of content. Some people are reaching out to me. I'm making connections. I'm building the value that I have as an individual to myself and hopefully other people around there. And I'm growing these platforms because, say, at some point in the future, maybe 1 year, maybe 2 years down the track, if I want to introduce excuse me, if I want to introduce my own project into the crypto world, then I have the opportunity of a platform and people that know about my content to leverage. I have connections that I've made, people that I've invested along with, people, colleagues of mine that can see my content, that trust my content, that trust what I do, and that will help me share and build my project. If I made a project, for example, I just opened up like a crypto t-shirt shop or a crypto merchandise shop online from Shopify. If I just started that from scratch and I tried to get people to help me share it, I don't know anyone, and I don't have a Twitter, I don't have a YouTube, I don't have any of these channels, I don't have an outreach. Why would someone listen to me? Why would someone help me, right? You'd have to pay them. But this way, at least, it helps me connect with them. People do favors for each other. You're putting value into the crypto ecosystem, and therefore you're bound to get value back. That's just how the value transactions generally work. So with that being said, be active even though you're in a bear market. Don't just be someone that just leaves it and comes back 5 months later to see what's happening. If this is your thing, if crypto is your jam, and this has a lot of it, crypto, in my opinion, has the potential to change people's lives. If that's going to happen, then why would you look at it as a side thing? This is something that there's so much value to obtain, so much more value to obtain than to give. Like whatever value you're giving, you will get it 10x fold, in my opinion. So that's the last point, is just always be active and always be open-minded. See what you can help with, where you can connect with other people. It just gives you opportunity and insight. And a lot of the times, like I've been kind of notified a lot earlier that the pre-sale is going on, etc. Just because, there's people that I have connected with that will let me know what they've come across really quickly. So before it goes out to the mainstream and all these articles are published, like I will know where to look and what to look at. So that happens just being connected to Discord communities, etc., etc. One of my communities is one of my Discord chat channels are here. It's free. Join. Just click this on dclblogger.com, and like it has 200 members. It's growing really quickly. It's all free. Just come in and talk. I just want to create a community that understands and helps each other in this crypto world. All right, guys, that's it for now. Let me know if there's a part of the strategy you're going to tweak, or if there's something that you find interesting about yourself and your strategy that you want to change. Something I missed. Maybe I'm wrong about something. Maybe there's other points that I should add to my strategy, but whatever it is, let me know. I would love to learn. And at the end of the day, I hope we all make a ton of money and change our lives in the next crypto bull run. But whatever happens, yeah, just keep building on value, and hopefully crypto will change the world.